So if you're new to trading or you've been trading for a while, there's certain things that might come up that you may think it's facts when it's actually myths. So in today's episode, we're going to attack 5 common myths that most beginners fall for that you should be aware of.
So, welcome to Married to the Markets. My name is Chrissy.
And I'm George.
And so, like he said, we're going to tackle those myths. So, let's just jump right into it. So, the first one that they say here is you need to be right most of the time to be profitable.
That's far from the truth.
It's all about risk management, making sure that you have more wins, obviously, but you got to be able to manage your money so you can stay in the game and be able to trade another day.
Now, one of the things that always come up is trading in the zone. When I listen in the zone, he actually says
Really good
it
book.
goes off of probabilities, right? And he says, listen, when you have your setups, you take your setups, and you want to make sure that it works. So you have 20 trades and you take it consistently, right? You take those trades consistently using the same amount, whether it's lot size or whether it's the amount that you're using as far as capital.
You don't get to
right?
pick and choose. You got to take it when you see your setup.
Right. But the thing is, it comes to risk reward. So, in a sense, even if you take 20 trades, you lose 50% of those trades. It's a 2-to-1 trade. You're going to break even if you win 50% of the time. Now, if you're doing a 3-to-1 trade, then you're going to be profitable. So it all depends on your risk to reward when you're trading.
So that was the first myth, guys. So we're going to be knocking these out because I think it's so important, especially for newbies. If you guys have questions, make sure you comment below and let us know. But myth number 2 is you need a lot of money to be trading, because a lot of people think they need thousands of dollars to step into this game, and that is not true. You can literally start off with $100 to $500, sometimes even less.
Yeah, especially in options trading. Options trading is leverage. You're using leverage to trade. So while it's more difficult for you to buy stocks, right? So say for instance, if you want to play Amazon or you want to play Tesla, you can't buy those. Those stocks are going to be more expensive. Versus if you're trading options, it's a lot less entry using leverage. So leverage comes down to play a key role when you're talking about having less money to trade with.
Yeah, you can start small and eventually start to scale up over time with those wins.
Now, one of the things that you want to make sure too is it doesn't matter what account size you have. People get this twisted, but even if you have a $500 account or a $50,000 account, you still should treat it the same.
Yes.
Your risk management is very important. How you trade should be very important. You shouldn't be saying, you know what, it's $500, I'm gonna risk all of it and then blow it up. No, because if you do that now and you actually get to 50,000, you work your way up to where you move that 500 to 50,000, you're going to have that same mentality. And you're going to end up losing all that money back. So if you develop discipline from early,
good habits, they spill over, right? And I always say that from your personal life into your business life, it all spills over. So please develop good habits, okay?
Yep.
So myth number 3 is you just need the right strategy. Beginners get obsessed with strategy hopping, and that's all of us. It is common. So we all want to find the right strategy. It just really takes one good strategy.
I'll tell you this, it sucks because there's people that want to trade and they really want to absorb, right? And when they go on YouTube, they're seeing all different type of strategies. Best strategy to make $500 a day. Best scalping strategy. Best
in 2025, in 2024,
you know,
like it's
all,
so much.
all these things, when all you have to do is listen, you find something and you work at that one. Stick with that one thing. Everybody have different strategies. The strategies work for them. It's what's going to work for you. Now, when you learn that strategy, you could put tweaks to it. So now you could add your own twist to it. But what people get twisted is they try to, oh, this is the holy grail. I'm looking for the holy grail. I'm looking for something that's going to make me rich. And they fall for these,
get rich quick scheme
but the
type of
thing
vibe.
that you have to understand is this takes patience. It takes discipline. And there's no get rich quick scheme. You're gonna lose.
Will lose on some
You're
trades.
gonna lose.
And be okay and be
right?
willing to understand that.
But if you learn from early about risk management, if you learn from early about identifying your stop loss before you get in a trade, all that stuff takes place. If you learn those and then you incorporate those in your trading, then you should be good.
Yeah. So let's go to myth number 4. More trades equal more money, which we know that is not true. We had a whole podcast episode about that, right? People
Yeah.
just wanting to constantly be in it. But that's why for us, we only limit ourselves to 3 trades per day. So we learn the hard way. That's not true, guys. You don't have to take a lot of trades to make a lot of money.
The whole concept of, oh, I gotta be in the market more to make more money. It's, for me, it's actually the opposite. You have to be in the market less because now you're taking quality trades. It's
Correct.
more of quality trades over quantity. Sometimes the best trade could be just waiting on one day, and that one day you take that trade, you hit for 100, 200%. You could
Yeah.
double your account. If now doubling your account, meaning you're risking your whole account, right? So just be careful what you're doing
Yeah.
right there. But the thing is, if you wait for your actual setup, hey, did all the confirmations hit on
Yeah.
that trade for me to take it instead of forcing trades, right? Because that's what I used to do. I used to force trades. I used to try to find
Yeah.
something in a trade. And when I try to find it, guess what? I end up losing.
Yeah, listen, one good trade for the week is better than 10 forceful trades. That's what I say. Because at least you find that one good setup, that one quality, and it's okay, this is it. Versus like forcefully getting into all of these trades and losing. It doesn't make any sense.
That's why you always have to, you look over your trades. You always look over your trades and say, all right, what did I do right? What did I do wrong? But before you enter into the trade or before you go into the next day, you look over and say, all right, if this happened, then I'll take the trade. But also, if I take this trade, where's my stop loss? Not, I'm going to go in this trade and then figure out my stop loss afterwards. There's certain things that you have to do, but also you have to set up procedures in place to say, listen, you know what? If I lose on this trade, then I might not take a next one for the next 30 minutes.
Yeah.
Or I might not take a next one for the day because I lost on the trade before. But what people do is, hey, let me go ahead and take this next trade. I lost on this one. I'm going to make it
FOMO.
up on the next one. And then you're going to try to make it up on the next one. And then you end up losing. Or you're profitable for your first 2 trades and you made money. It's not like you didn't make
Yep.
money. You made money that you never made before. You probably say, listen, you know what? You just started out trading and you make $2,000 off those 2 trades. And you'd be like, man, if I trade the 3rd trade, I could make $3,000 for the day.
Yep.
If I look at that $3,000 for the day, that's $1 million a year. Woo! And then you go ahead, you trade, and then you lose the
Get
money.
clapped. Listen, guys, do yourself a favor. Please go back and watch that episode where we talked about FOMO. I think it's very powerful. I think it has a lot of useful information in there because FOMO is a hell of a thing. And again, if you keep chasing and you get clapped and you have no more money, you're out the game.
Yeah.
So it's very important that get it together when it comes to that.
Yeah.
So let's go to myth number 5. Emotions have nothing to do with trading. Now, this one right here will keep you stuck because we all know, at least the good ones know, that this is a mental game, okay? 80% of this is mental, 20% is strategy. And I don't care, fight me if you want. I know that for a fact. It is the truth. It is a mental. You mentally have to be put together for this. And you have to be strong.
Yeah. Yeah. You can't. The thing is, again, if you're disciplined in your life, you're disciplined in your trades. Okay. So you just have to have that game plan.
Yeah, because emotions will seep into certain things. You start doing things that you shouldn't be doing. You'll start chasing. You'll start over leveraging. You'll
Start calling yourself names. You'll start second guessing your life and trade in
Yes.
your career. Be like, man, you know what? Maybe I need to go
Yeah.
back to this.
If you
9
do
to
not
5.
master your mind, the markets will humble you.
Yeah.
Okay. You have to work on your mindset. You have to work on psychology. This is why I tell people get trading psychology books. You have a strategy or you have a mentor, follow that, but get the psychology books. When you get your mind right in this, you will go a whole lot further.
Yeah. Personal development. Personal development is very important when it comes to you trading. And when you meditate, when you go ahead and you go for walks, when you work out, those things,
It does.
right? Those things help. So you have to incorporate certain things in your life to make sure that you're disciplined. If you're disciplined in your life, you'll be disciplined in your trades. And that shows because back then when I was over trading, back then when I was chasing, I wasn't disciplined.
No.
I didn't have positive daily routine habits.
Yeah. And guys, I don't want you to feel like we're ever coming for you guys when it comes to this, right? These myths, we've all been there. We've all fallen short at times. We just like to bring this to the forefront so you guys are educated. You know how to make certain moves, right? And this is why we invite you guys to come on over to Married to the Markets Discord group. It's a free group. All you got to do is click on the link in the description, come over there, learn a little bit, educate yourself, be surrounded about just like-minded people. Again, my husband and I, we've been together for 17 years. We've been married for 12, and we are telling you that it's better together because you have each other as support, accountability, and this is just something that we love doing, and we want to invite all the married couples to come on over and come with us on this ride. So again, comment below, like this video, share this video with a friend or a family. We just wanted to go over these myths with you guys. Do you have anything else that you want to say today,
Nah,
babe?
just don't stay stuck, don't chase, and just always be open to learning. But develop good habits more than anything else and have your trading plan set so when you get in, you get out.
Yes. So let us know which one of these myths hit you the hardest in the comments. And otherwise, we will see you on the next podcast episode.
All right,
Bye.
bye.